Welcome to the Deep Dive. We're here to help you cut through all that noise and get straight to the important stuff. Today is August 6th, 2025, and we're going to really dig into some key developments happening right now in oil and gas. We've looked through World Oil and Gas Journal, Upstream, Oil and Gas 360, the usual suspects to pull out what you really need to know.
Yeah, it's crucial. This industry moves so fast, and understanding these shifts, whether they're, operational, financial, or strategic, it's key. And
Mhm.
thinking about what these daily moves actually signal about the wider market, well, that's where the real insight is.
Okay, so let's get into it. We're seeing some pretty interesting strategic plays and operational milestones today. First off, Total Energies. Looks like they've sold a stake in two Vaca Muerta shale blocks down in Argentina.
That's right. YPF picked those up for, what was it, $500 million.
Yep, $500 billion. That's according to World Oil and Upstream.
And what's really interesting there, it's not just the cash. It really points towards Total Energies maybe shifting focus, optimizing where they put their money.
Right. Pulling back from certain areas, maybe. Vaca Muerta's huge, of course. Argentina's big shale play.
Exactly, a major unconventional resource. So divesting there, it makes you wonder what their next move is, or perhaps where they see better returns or less risk.
It's a big portfolio move.
Okay, and then shifting over to Canada, we've got Imperial Oil. They're an ExxonMobil affiliate. And Oil and Gas Journal reports they've officially commissioned their new renewable diesel facility.
At the Strathcona refinery, yeah. This is significant. It shows how these big integrated companies are using their existing refinery setups to pivot towards lower carbon fuels. It's not just building something totally new, it's adapting what they have.
So they become players in biofuels without maybe the massive new greenfield investment you might expect.
Precisely. It's a smart way to leverage their strengths and meet that, growing demand for sustainable options.
Okay, now here's where things get really interesting on the infrastructure side. Energy Transfer LP Oil and Gas Journal says they've given the final green light, the FID, on their Desert Southwest pipeline. Ah, yes, the big one, 516 miles, 42-inch diameter. That's a major commitment.
Huge. Designed to bring Permian gas over to Arizona and New Mexico.
And, connecting the dots, approving a pipeline that large, it just underlines the ongoing need for natural gas, especially feeding those growing southwestern markets.
It definitely suggests long-term confidence in gas demand from the Permian.
Absolutely. A 42-inch pipe isn't for small volumes. It's a serious artery for moving energy.
Right. And while we're talking about major players, World Oil Online had a piece on 80 NOC gas. They're reporting a record Q2 performance out of the UAE. Seems like they're showing some real resilience.
That's notable. It speaks volumes about their position, doesn't it? Low-cost production, strategic placement,
Right.
allowing them to perform strongly even when the global market gets choppy. It shows the power of those big national oil companies with significant accessible reserves.
So you've got big infrastructure bets on one side and strong financials from established producers on the other. Interesting balance. Okay, let's round this out with this market outlook and what's happening with supply. Oil and Gas 360 picked up on comments from BP CEO Murray Auchincloss.
The non-OPEC supply forecast.
That's the one. He's projecting that supply growth from producers outside OPEC Plus will probably stall out in early 2026.
Which does raise some questions, right? How do statements like that, these forward-looking projections from industry leaders, mix with the real-time data we see, like inventory numbers? How does that shape sentiment now?
Good point.
Yeah.
Because those future predictions definitely influence today's investment choices, I'd imagine.
No doubt. And we've seen non-OPEC, particularly U.S. shale, surprise people before. So it's a forecast, but no, things can change.
True. Always dynamic. And speaking of real-time data, Oil and Gas 360 also gave us the latest U.S. crude inventory numbers. Looks like a draw of about 3 million barrels from the previous week.
Okay.
That puts commercial inventories, excluding the SPR, of course, at 423.7 million barrels as of August 1st.
Right. And it's those week-to-week changes, those inventory draws or builds that give you that immediate pulse check on demand versus supply.
They sort of ground truth, the bigger picture forecast.
Exactly. It's this constant back and forth between the long view and the short view, the forecasts and the immediate data. That's what makes understanding energy so complex, but also so vital. Continuous learning is just essential.
So thinking about what this all means for you listening,
Yeah.
today really shows an energy sector that's, constantly adjusting. It's balancing managing its traditional resources while keeping a very sharp eye on the future, on strategic shifts. It's quite the juggling act.
It really is. You've got asset optimization like the total energies move,
Hmm.
massive infrastructure builds like energy transfer pipeline, and these shifting market views. Seeing how they all connect,
Yeah,
that's the key.
absolutely. Well, hopefully this deep dive gives you some food for thought on how these pieces fit together, maybe informing how you see specific company strategies or regional trends. Thanks for tuning in.